What's going on, guys? It's Daniel from CoinSpots here, and today we're going to be continually looking at Bitcoin's price action as well as discussing a few news stories that could have an impact on um, your portfolio and how you kind of look at the market as a whole. So kind of how like we were discussing yesterday, there's just such a big demand for Bitcoin now that everyday people are buying up these dips pretty much as we've seen here. You know, so many people are just putting in a couple $100, and it's really having a pretty big effect at keeping Bitcoin's price above 10,000 and now pretty much above 11,000. Um, and it's pretty crazy when you look at it because if we zoom out back to our previous all-time highs, literally when we touched that high, it was just a huge sell-off from there, right? We've seen that when we were just at 5,000, and we saw that back here when we were just at 3,000. It was pretty much instant sell-off once that peak was hit. But here, as we've been in the past few days, we're still above the Bitcoin channel. The MACD, the RSI is showing no signs of any bearish, any downturns. So, pretty much what this shows is that the demand for Bitcoin is so high that people are just going to keep buying. At this stage, really, there's no, technical indicators and technical analysis that, you know, we could do or anyone could do really to, predict where Bitcoin's going. It's really just when is the demand for Bitcoin going to stop and when is it going to kind of dry up, right? And what I mean, when is it going to stop? It's not necessarily like no one else wants Bitcoin, but I think as we all know, there's a kind of over exuberance for Bitcoin right now. A lot of people want it coming off of the holiday weekend, and they see their portfolio go up, and they're going to continuously buy more. So I think what we're want to look at when analyzing are we at a market top is when the demand dries up. I think that is going to be the biggest indicator. No technicals are really going to tell us anything at this point, um, simply because Bitcoin has blown past everyone's expectations, right? I remember back when Bitcoin was 6,000, people were calling a top, and I even believed that that was the top. And then Bitcoin went to 7, 8, 9,000, and I'm like, all right, 9,000, that's got to be it. But Bitcoin surpassed that again. So, as we all see, it's really just an increase in demand, and you're going to want to look at when that demand dries up, and that's when we're going to see a huge sell-off in Bitcoin. That's what you want to be looking for. It's more important to look at the people that are buying, right? Technical analysis is still important, but at the end of the day, it's humans. It's me and you buying cryptocurrency. And while you can't necessarily predict markets, you can, to an extent, predict how people are going to react. And I think that is probably one of the best tools that you can use um, when looking to capitalize on a market such as the cryptocurrency market, which is, majority based on speculation and fear and, fear of missing out and all that kind of jazz. Um, so, taking a look at altcoins, we've seen just a huge, huge growth in a ton of them, right? We've got IOTA that's tripled in value or in the past 3 days. Got Monero up almost 23%. Stellar, Lisk, a lot of these are in the double digits, and even Arc. I'm in some Arc, so doing pretty good on that. But this shows just kind of the over exuberance people are having for crypto, right? People who have just gotten in, they've bought Bitcoin, but now they realize, hey, there are 1,300 other cryptocurrencies that I can get into. And I think a lot of this price action for altcoins is as a result of just that. The new people getting in and realizing that there's so much more in cryptocurrency than just Bitcoin, right? Guaranteed, some of these coins might have had, something released. So, for example, EOS, we're going to be taking a look at EOS. Where is it? Number 14, right? Almost $2 billion market cap. But obviously EOS had a new release, their Dawn update, but a lot of these other coins, I think it's just really due to newer people kind of just learning about altcoins and expanding their portfolio into altcoins now that they have that possibility, really. So yeah, moving on to the news, big headline, actually just yesterday, is that Bitfinex was hit with a DDoS attack. And pretty much, if you don't know what a DDoS attack is, it's just when someone or multiple people send multiple requests to the server, and the server pretty much gets overloaded because it can't handle all of the incoming requests. So this is specifically interesting because something like this can definitely impact the price of Bitcoin. Now, we didn't see it here because it was temporarily down only like an hour. But if an exchange gets hit, whether it's hacked or taken offline, that's pretty big news, because especially an exchange like Bitfinex, where there's millions, hundreds of millions of dollars flowing in and out, whether it gets hacked, that those funds are stolen, whether it's taken offline and people now don't have access to those funds, they can't trade their funds, right? That's a really, really big problem. As all of you know, Mt. Gox a couple years ago, right? They were hacked and everybody's funds were stolen. Now, obviously, Bitfinex wasn't hacked, but it's a similar concept of targeting exchanges can be a big problem for the price of Bitcoin. Now, guaranteed, Mt. Gox was pretty much the largest and one of the only Bitcoin exchanges back then, where now we have Coinbase, Bitstamp, etc., a ton of other ones. But even Bitfinex, it holds probably like 3 or 4% of the total Bitcoin volume. That's still going to have a huge impact on the price if people can't access their funds because the servers are down, or for whatever reason, Bitfinex has to temporarily block trading. So any kind of negative news with the exchange is definitely going to have some effect on the price of Bitcoin. And something like this just goes to show how you should never keep a lot of money on an exchange, because considering these aren't regulated, and even if, for example, Coinbase is FDIC insured, that really doesn't mean anything at the end of the day, especially with your cryptocurrency. It's just not safe to keep it on an exchange. You can probably have a couple thousand dollars or Bitcoin on an exchange for actively trading, but the majority of your portfolio should be in a hardware wallet or a software wallet on your computer, right? Now, obviously, that's probably like an inconvenience to a lot of people, especially if, they're thinking about setting up a trade and they're going to be moving money on the exchange. Really that's a risk in itself. Um, I personally don't trust any of the exchanges with my life. Um, it's just that since there is no regulation, they could literally vanish in a second. And I mean, I know I'm sounding relatively negative about exchanges, but it's just a risk that you have to have because, or a risk, I should say, that you have to be aware of because there's a ton of posts online where people have claimed that their accounts have been frozen and the exchange has just stolen their money pretty much. So you do have to realize that when dealing with exchanges, make sure you have all of your verification um, done right. Everything checks out good before you put some money on there. And once you plan your trade and you know what level you want to get in at, what Satoshi level, I should say, right? When the price or when you get like an alert, set up an alert on your phone, move Bitcoin to the exchange, buy it, and then get it off. I think that's the best way to keep your cryptocurrency safe, um, and just takes the headache off of you. If something like this happens, because I know how angry I would be if like Coinbase or Bittrex, right, had a DDoS attack and then the servers were shut down and I had no access to my money for however amount of time the servers were down. Moving on, EOS. EOS has been blowing up recently, and I think that we pretty much just saw a classic ICO reversal for EOS. It just blew up in the summer, and then we really went from what is this, $3? No, $5 all the way down to 50 cents, and now we're back up at almost $4. So I think down here a ton of institutional investors bought back in or bought in for the first time, and now we can actually see EOS is delivering on their promises. Right, their new update came out on the day that they said it was going to come out, so that's big. They're pretty punctual with this. I like it. Unfortunately, I did not ride the EOS wave up, um, but EOS is definitely an interesting project. It's a lot of people, compare it to Ethereum. It is, similar to Ethereum. Um, in some respects, it's better because it allows people to use, decentralized apps without having to go through the Ethereum client, right? So basically, if you want to use any app that is on the Ethereum network, you have to go through the Ethereum client and buy Ether to use that technology. Where EOS is trying to bridge that gap. So just regular everyday people can start using those decentralized applications without having to overcome that barrier of getting an Ether wallet, buying Ether in order to be able to use whatever decentralized application they want to. And I think that is a very important thing EOS is doing because getting rid of as many hurdles as you can allows more people to get into cryptocurrency. Because if there's a whole bunch of steps you have to do in order to get something that you want or something that you're interested in, a lot of people are going to turn away from it. And just bridging that gap between cryptocurrency and everyday people allows or it makes it easier for developers to build those decentralized apps as well as consumers to use those decentralized apps. So EOS is definitely a project to take a look at. You know, it's number 14, excuse me, on CoinMarketCap right now. So $2 billion pretty much in evaluation. So it's something to definitely keep your eye on. I don't think it's going anywhere. Um, and you know, speaking about decentralized apps, this whole CryptoKitties thing has been kind of blowing up um, in the crypto community. You know, something like $1 million worth of ether were put into this, and pretty much what this is uh, digital cards, pretty much that are cats, and they can be collected. Um, and you know why I bring this up is for two reasons. One, because of the whole thing I was talking about with EOS, that those hurdles that you have to cross in order to get something like this. So I was actually trying to buy one of these, and I couldn't because there was some kind of problem with the network, and my Ether transaction, did not go through. So that, first of all, would be a perfect example of those hurdles that people have to cross in order to get something like this. Like, for example, if this was the craze that everybody wanted, right? And obviously this is the only example I can use because this is pretty much like the biggest decentralized app on Ethereum right now, which is pretty crazy. It amounts for something like 15 to 20% of the Ether volume right now that's going through the network, which is pretty crazy in my opinion. But if this was, an app that was pretty popular for some reason with, the masses, the regular consumer, right? They have to purchase Ether in order to get this, right? That's one hurdle. Then when they purchase it, or when they're about to purchase this, and then there's some kind of network error that their transaction couldn't go through, that's another hurdle, right? And those things are what turns people away from cryptocurrency. And that is what EOS here is trying to fix, pretty much. But another reason why I brought up this whole CryptoKitties thing is because of the whole concept of scarcity. And with cryptocurrency, scarcity is one of the biggest things because there is a max supply of a lot of tokens, right? Obviously, some of them there aren't, but Bitcoin, for example, Ether, Litecoin, I believe, EOS, right? Obviously, right, this is a large total supply, but obviously something like Bitcoin with 21 million, it creates a sense that people want to buy into it before it's too late. They want to hold some of that Bitcoin before it's all gone, or more so before it's not affordable really anymore, right? Because it's already $10,000 for one Bitcoin, and people want that the whole concept of scarcity makes people want to get one of them or part of one, pretty much. And that's another factor of what drives the price up. You know, if you have something that not a lot of people have, it's, people feel in a sense better that way, right? That's why like collectible items, or any type of brand that has like a high demand but very limited supply, people they covet those items. They want them really bad. So, best example I can think of is the clothing brand Supreme, right? Now, I don't know how many people here know about it, but it's pretty much a huge skate slash streetwear brand that has a huge demand but produces only a very limited supply. So anytime they drop a new round of clothing, it gets sold out in at most 3-4 minutes, pretty much. And that the whole concept of scarcity makes people want to own one of those items because not that many other people will own it. And that same concept is very big in cryptocurrency. The fact that you own a Bitcoin or part of a Bitcoin, while it's still affordable and while it's still available to get. Um, and I think that the concept of scarcity definitely helps drive the price up for those cryptocurrencies that are limited. So that is definitely another factor to think about. Demand and scarcity. That's what is for the everyday person the reason why that they're buying into crypto. So yeah, I think that that's going to be it for today, guys. Getting another daily video out. Still figuring out the schedule, but hope you guys enjoy the videos, and I'll see you guys next time.